Afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 10th, and just wanted to take some time to talk about what we've seen most recently here in the markets. Talk a little bit about if the most recent correction that we've seen is over or not, and where we see markets moving from here on a very, very important day in the markets as we got CPI, which is inflation data, this morning. So last week was a strong week in the market, reversing the trends that we've seen the last couple weeks. The S&P 500 was up 1.4% on the week. The mid-cap index was up 1.6%, and the small caps as measured by the S&P 600 were up 0.9% or 90 basis points. So we started off this year in a very, very volatile time on the downside and into correction territory in the S&P 500. And so what investors are wondering right now is, are we at the end of this correction? And at River Place, we really believe that we more than likely have seen the end of the correction to start markets off this year, and are going to see increased volatility throughout the year, and we're going to talk a little bit about that more in just a second when we touch a little bit later on in the video about our outlook. But the most recent correction is more than likely over, and it's due to the fact that we are getting good, strong earnings coming in from corporations. The economic data that we are getting about the overall economy itself is still very good. The business environment is still good. So for example, one study done by Bank of America saw consumer spending of their own consumers, their spending was up 17% year over year, meaning the consumer is still very, very strong. And remember, we are very much a consumer-driven economy, and that is very, very good news for business prospects moving forward. So one of the things too that we have talked about, and I'll mention again, is the market every 2 years goes on average over the history of the stock market, goes through a 10% pullback every 2 years. We haven't seen one in the last 2 years, and this was very much a very quick 10% pullback and a reevaluation and readjustment of the stock market back down to more tolerable price earnings multiples on a lot of these names that have gotten out of whack and too high in rising interest rate environments. We've talked about that as well, that the growth stocks are just not going to perform as well. But what we see coming out of this correction is we do see a leadership change in the market. So for the past decade, and the theme going into last year was really that value was going to move us higher through 2021 as we reopened the economy. And that was the case as we started off the year last year. Value was significantly outperforming growth, but then we got the Delta variant and value started underperforming, and we reverted back to the growth trade that we had seen get us through 2020. And growth carried the mantle, and so by the end of 2021, you saw growth and value both kind of at the same level of return. So if you were steered one way or the other, chances are you did pretty well for the year. But as we emerge this year, we might still see some back and forth, but we really believe that value is going to take the leadership. We believe that as we continue to reopen the economy, as interest rates start to rise, and we are in a rising interest rate environment, value and cyclical stocks are the ones that tend to outperform in those types of market conditions. And so today we got the CPI number at the highest level since 1982 at 7.5% year over year inflation. And now we had been rallying this week on the back of corporate earnings and good earnings reports. But now that we got that number, you saw markets kind of take a break today. There is concern that the Fed is going to do a 50 basis point or 0.5% rate hike when they meet in March, rather than the 25 basis points that they, or 0.25% that they alluded to in their last meeting minutes. So it has investors a little spooked, and inflation is running that high and that hot. But the Federal Reserve is going to have to do something to curb this, and that is where the volatility is going to continue in the marketplace. So until we get a better understanding of inflation getting under management, how the rising interest rate environment is going to impact economic conditions, expect there to be a lot of wavering back and forth and a lot of discussion back and forth amongst investors about where markets are going to move from here. Is the Fed being too aggressive and you'll see selling, and the Fed's not being aggressive enough, you'll see buying? or the Fed's got it just right, and you'll see additional buying. So we see more volatility moving throughout the year, but we do still see the year ending on a positive tilt and on a value tilt. So if you have questions about how that impacts or how that impacts your individual portfolio, feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful day. Talk to you next week. Thanks.